Hello guys, and welcome to another market review. So a lot of things happened last week, but we're going to start by looking at Bitcoin. Um, so last time I spoke about Bitcoin, I mentioned how in order for it to look bullish, it really had to climb above this red box here, and we saw how it was not able to close above this 116k level. So when we drop into the weekly, yeah, let's go to daily. This is the level I wanted to short Bitcoin from, but it never got there. It just reached 97k and it just died. So now Bitcoin is expanding to the downside below the yearly open, and really the momentum is to the downside, even though it's now reaching a point where it could reset a bit, and certainly you don't want to short around this area. The time to short was probably above the yearly open, and let's just draw this price range tool here. So now Bitcoin is around 40% down from the all-time high, and Bitcoin has this habit of pulling back. I would say, last cycle it was something like 76%, and well, now because the asset is that much bigger, it takes a lot more money to move this market. So I don't know, at least 50% this thing has got to pull back. So that would lead us into this 60k area where we had this massive bull flag, and then we broke above. So the thing I want to mention is that Bitcoin's momentum has been to the downside, and before it starts pushing higher, it really needs a big reset, and it's going to take time. So buying here, if you're expecting a bounce, I think it's logical, but from a long-term spot holding, I think it needs a lot more time. Maybe you're talking about months. We need to look at this months, uh, some months from now. So, but now on the weekly, as intraday trading, there's this weekly high level which is naked. It hasn't been tested, and I'm pretty sure if price came here, price would bounce. We also have this pretty good level on a daily. It's again the last high pre-break, and it hasn't been tested, and it had this massive impulse. So pretty sure that if Bitcoin were to drop around this area, it would, you look for longs here, because it's oversold at this point. It would be oversold. And now I wanted to look at this chart from a weekly time frame, and also taking into account the moving averages. We've now had the first weekly close below the 200. No, sorry, this is the 100 moving average, weekly moving average. And kid you not, this looks pretty similar to all the price action we had here, in my opinion. And this thing here, this looks like this. So th this weekly candle, which closed below the 100 weekly moving average, just looks like this one. So this is why I think that it's gonna take time, dude, to really build a long spot position here. this market really needs to reset. And I don't see a bull case unless we reclaim the yearly open and this weekly moving average. But everything is pointing towards this market targeting the 200 weekly moving average. So around 60k is where you want to buy. And this would be like, yeah, 55% correction. Pretty good. So those are my high time frame thoughts. Also, when you look at the S&P, it's pretty hard to time a top on this market, but the current price action on the weekly kind of looks similar to the one we had here before we had this massive drop. And I'm not saying that we're gonna have a massive drop, but again, it doesn't look, it just looks like it's stalling around this area. That's all I'm saying. So imagine if this were to pull back. Imagine if the yen were to strengthen. Bitcoin would it shit. So that's my point. So with that in mind, I want to move on to gold and silver because they were the main actors last week. So gold finally had this massive pullback, dropped 12% in a single day. And the question is this rally over, or is this a healthy pullback and we're gonna make a bottom and make new highs? Well, I don't fucking know, but there's something I know. And if you look at the gold chart spot, uh, I think Oanda has, yeah, Oanda has this gap here. And this gap is also present when you look at gold futures. So GC, that's the contract. So when you look at this, it looks like this market wants to fill this gap. So I think it does make a lot of sense to think that the short-term momentum is to the downside on gold. However, you're just not gonna blindly short around this area after we've dropped this much. So now I'm looking for levels to engage short in order to fill that gap. And from there, probably I think that price would look to range in for my bottom, and then we'll see. So the level I've picked is this daily low pre-break. So when we go low down on the time frames, we see reactions. So this level seems important. We had the break of this level here and 2 attempts, failed attempts at that level. Now on the hourly, this doesn't look clean at all, and the price action has been kind of choppy around this area. But I do think that this area is key for gold. So if the market were to find acceptance, so that means that price spending time above this level, I would get worried if I was short, because I think this is a real pivot. Is when you see this support zone, support, and now you see price deviate and fail to close above it. But for now, I'm looking to short this, especially if the price action is fast. If we get a spike to the upside, like a dead cat relief bounce, and then we target filling this gap. Now, on silver, I've used the same logic, but you know, the last low pre-break is really high, and I don't think we're gonna bounce that much. So on the H4, I found this low, which we also broke, and it hasn't been tested on the hourly. So I think that makes it a really good level to short. And if I were to short this, um, I think because we're looking, yeah, I would say you're looking at something like this. But one should be close. One should watch the price action at this level if it were to come into this area, because I wouldn't want closes above here, and yeah, you really have to be wary of the price action because you don't need to take a full 1 hour loss or however you are willing to risk on this trade. If you see acceptance above a level you think is key and the market should react from, you get out. There's no question about it. And yeah, the target, I think this is a good target, mostly because if price trades a week this big, I think that the market is at least going to feel some of that. Yeah, this trade looks good. Looks really good to me. And I think this low here, it's pretty nice. I think this is the daily level I was speaking about. Maybe we should even get tighter with this one. I don't know, because imagine it trades into here. It's really close to this daily level. So, like, does it make sense to put your stop loss just really close to this significant level as well? Yeah, maybe you should get tighter with your stop and even risk a little bit less and give it another chance if it came into this level. Yeah, and from here you're just looking for a big rotation lower. Something like this. And again, the main idea before this short on gold and silver is that we've put in a weekly bearish engulfing. So the momentum should be to the downside. But because we've had this sharp drop so inefficient on a Friday, um, it does make sense. It does make sense to me to think that the most profitable idea is to look for shorts on bounces, especially sharp ones, because they will get sold easily and you will see a reversion really fast. Now, I wanted to cover EURUSD and the dollar because when we move on to the dollar, I was caught by surprise here. I think the dollar looked fine up until it dropped like this. Um, I was expecting the dollar to trade into this red box and then drop. But it tanked, and I didn't expect it. However, when you look at where the dollar bounced from, this is a key area. This is the last accumulation before we printed this massive leg, and it makes me question where the dollar really wants to go. Uh, this this zone here has proved to be really important, and once the dollar breaks below here, I think it opens the target to much lower prices, at least 90. I would say 90s, yes. However, it seems that for now we just trapped in this area, and you know, when price was here, I was thinking, well, maybe because we've tapped this zone here quite a few times already, maybe the next time we come there, we reject and we make another attempt, break above it, and we take out this high at least, and we trade into 102s. So maybe the dollar is not as dead as people think it is. I'm just battling with that idea in my mind. But you know, when we look at the euro, it's kind of crazy because we had this massive weekly bullish engulfing candle, and the following week we have this shooting star candle. Really bearish price action. The last time we had one was here, and prices tanked for the next 2 months. So where do we go now from here? Well, this is quite bearish. It could be seen as an SFP of this massive weekly high, also monthly. But this is a weekly bullish engulfing, so what the fuck? What do we do now? Well, when we look at the daily time frame, we can spot this SAR level. It's pretty clean. We made this high before we had this last impulse, and then the market found support there the following 2 days. However, it seems like this impulse was not really important because the market just retraced it. We had two inside days here, and then the third day just broke it. So when we look at the H4, the price action around this level is pretty clean. I really like it, and I think the momentum to on the short term for the euro is to the downside. And the reason why I think that is not only because last week's candle was so bearish and it looks so ugly. I think that it, it, it is related to the kind of structure that led into that key swing high. What I mean by that is this move that happened on the left hand side, because you have your move up, you establish a small base here, and then you have another move up, and then you retrace it, find support here, you make a lower high, support, lower high again, and another lower high. And now the market breaks lower. When you have this inefficient move, this inefficient move, and prices starts undoing this move. It's like price is yelling to me that it wants to keep doing that, and it should do something like this and trade at least into the yearly open. Now, I've mapped out these symmetry lines or channels, however you want to call them, and they fucking work. Because here we found resistance, and it was also aligning with the yearly open, but here it also did that. And this one here, and here. So my short-term bias is short, but I'm pretty sure that the market will likely give some bounces around this area or this one, and at some point they will become irrelevant. Maybe that's what happens next week, but they've been useful all the way up to here, all the way up to now. So because this move here on Friday was this one's so one-sided, and now we're going to have a new monthly open. I don't know what the rest of February is going to look like, but I do think that the next week is going to look something like this. And because I want to get short, the nicest level I can think for that is this one. And I think it's pretty obvious. My stop loss would be around here just for safety, but I wouldn't want to see H1 closes above it here, and I don't think it's going to take out this one, but I just like to use wide stops in case, you know. But yeah, this one should work. It really should work. And I think we should also get pretty clean price action around here. So when we look at the H4, this is the last low pre-break here. And I think this break is massive because, as I told you, this SR zone comes from a daily level. So a retest of that should give us a reaction. Just like it's proved to be support here, it should be resistant. And this is naked on the H4 time frame. There hasn't been any retest. So similar thing on the hourly, right? So I'm gonna put a blind limit order around here with my stop loss here. And the target is gonna be the yearly open. And probably this market will bounce from here, but I think the yearly open is gonna get tagged, pretty sure. Also, when you look at the weekly, whenever you have this big of a week, you're gonna get a bounce, just like it happened here, right? But currently, I cannot think of a reason why price should climb any higher than this level because it's significant. Yeah, I'm just trying to look at the past weekly shooting star, and there's not much structure here. Just like there's not a key SR level, just like we have here to ensure that the market is not gonna climb much higher. So this is my plan for the euro. I wanted to cover the Aussie dollar because I think it's going much lower as well. And you know what's crazy to me is that this current structure looks exactly the same as this one here, right? Just this one is on a much bigger scale, but I just think this market is ready to rotate lower. Whenever you see these structures sort of complete the upside, it's like you see this sharp move, consolidation, move up, maybe another consolidation. Around here, you start seeing something like this. This is cooked, my opinion. And the problem here is that I don't find an SR level just as clean as I did on the euro, but this gap here is a pretty clean target to me. This market shouldn't go above here if we are correct about this structure unfolding, undoing all this move up. It really shouldn't climb above this high. So I would feel safe putting my stop loss there. The problem is that I don't find a level to get short from. That is a problem. But yeah, you see my reasoning on the H4. You see this strong rejection. Maybe we can get a bounce into there. I would love to sell that, but I'm not sure if we're gonna get that. But once we fill the gap, I think this market could range here a bit, but really watch out for a break lower. I think it's really dangerous when the price action has been this one-sided. And again, where was it? Because I had a pretty good example here. I think it was this one. So let me draw something here and see. And again, all these stops, they kind of look similar, don't they? They have this explosive move up and they make this stop, and the highs like never really gets taken. And once price trades into this low that led into this high, this key swing high, and breaks it, all the bounces are for selling, and it induces that move. And the key thing here is that here it looks a lot more choppy, but here, look at that. It's just inefficient move. So yeah, man, I wish I was already short because I would hold it. Yeah, that's life. So lastly, I wanted to cover some of the yen pairs because after the rate check and this drop on the yen pairs, I think they look good for the upside. The reason for that is because we've had these 4 attempts at breaking lower on the daily time frame, and we've not had any success. But I'm really hesitant to engage here. And and I don't see anything clear now. But maybe if this market climbs above the yearly open, you can get long. And if the market were to break below these lows, then you change your bias to short. I think it's pretty simple. But USD yen is the cleanest of all of them. And again, you have to uh, be aware of how well something as simple as a trendline break works on this pair. Just look at here. I know a lot of people were trying to get long yen here, but they were getting just killed by this trend line, and all they had to do was wait until they had the first H1 close above. And again, it's kind of fascinating how this perfect retest worked there. I mean, yeah, it also lines up with this key swing low, right? But kind of amazing. And here we have something very similar. After the rate check drop, you draw this one and you buy the first H1 close above and price rallies. It's kind of dangerous, the spot the USD yen is at, because this this thing could happen because you have an open gap and people might pile up on longs, but the moment you test this level, it rejects, and a lot of longs are trapped here. So I will be watching, but because we are bullish um, USD, and I said that Eurogen looks good for to the upside as long as these lows don't break. I think USD yen is the easiest of all of them, and it probably fills this gap and trades into the yearly open. But I'm not sure. Those are just my thoughts. I think the Euro USD is one of the cleanest plays I can think of. Maybe shorting silver if it bounces. But yeah, look at this fucking piece of shit. This this is gonna get filled in at some point. It's gonna remain like that. So yeah, I think I'm gonna leave it there and see you guys next week. On to a profitable trading week. Let's go.